first of all, we already have money flowing into the metals. It always starts with the metals, then it goes to the big companies, then the developers, then finally down to the juniors. We know historically that's the pattern for how money flows into our sector. Well, we have it flowing into gold now, right? Look at the gold price. Number two, looks like now we're going to have money flowing into the producers because of the green on the screen, right? For Main Street, Wall Street, and all these other investors, generalist investors that are looking at this and thinking, wow, look at that. This will especially be true if the general stock market gets weak. If it has a correction, if it goes into a bear market, investors are going to be looking around where they can put money that's profitable. Well, this is going to be staring them in the face. And so I think the process of money flowing into the majors and the producers and that has started. Next will be developers, and next will be juniors. We don't know the time frame there. It could be in a couple months. It could be a year from now. But the fuse is lit. It has been lit, and it's my opinion, and my money's where my mouth is. I think it's going to flow down to the juniors here within a period of time that you're going to want to be long.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
I think the question now that we've established like why you believe the juniors are ready to outperform, I want to get a sense of how big you think this junior bull market could actually be relative to historical bull markets. And I think in your book, which I've got with me here, I think you talk about the runaway 70s where gold rose about 721% in the space of 3.5 years, I think. Silver rose about 1,063% in that same period. And then you had some junior mining companies. I think Copper Lake was the one you quoted, which increased by a staggering 13,000%. I mean, this is unbelievable. So when you fast forward to today, and we already have these gold prices rising to all-time highs, which you note in your book as one of the most important catalysts for what makes a gold mining stock go on a run. And then when you add in these sort of ancillary things like September being the best performing month on average in terms of seasonality for gold, a rate cut on its way from the Fed with gold being inversely correlated to rates. And then also you look at like the BRICS appetite for gold as well. I think I saw today that Russia recently announced its plans to buy another 30 tons of gold. So I say all this to ask you one thing, Jeff. I mean, what parallels do you see between today's market conditions and the historical periods like the 1970s and the 2000s?
That's a great question. And the answer is this is probably going to be one of the bigger bull markets in mining stock history. That is another big statement, but I say it because if you look at the ratio of whether it's the HEY, the Barron's, GDX, their ratios to the gold price, believe it or not, they are still near historic lows.
Yeah.
Historic lows.
I know.
As we sit right now and talk, that tells me that we're starting from such a low base that once these mining stocks really get going, it's my opinion that when money starts to flow into our little junior sector, we see higher demand, we're going to see higher stock prices, we're going to probably see some easy doubles and triples. I think that's going to happen. Because it's happened before, A, and B, because we're starting from such a low base. They're so dramatically undervalued, and every junior mining investor knows that. They've been beat up, and they're depressed, and it's not, they're not really moving. And so from that level to where, historically they could go is a very significant jump in share prices. So that's what I think is going to happen. But, again, that's another projection. I don't know that. Nobody knows that. But what I do know is that they're so undervalued and so beat up, and their ratios to gold and the general stock market, whatever you want to measure them against, are so low that the value is incredible. Mining is not going to go away. Mining is still going to be here. And at some point, I think investors are going to come into this sector and from these low levels could really ignite share prices.
Wow. Yeah, I feel like I've just come into this at the right time when you say things like this. Because obviously it's been years.
There's a lot of examples in the book. I have just hundreds of examples of stocks that have hit pay dirt, throughout history. So it's not just the 1970s. It's literally every decade something happened that ignited mining stocks, even if the gold price didn't move. Now we have the gold price, at our back. So it would be abnormal. It would be historically abnormal for mining stocks not to respond at some point here. It would be therefore normal for them to really ignite at some point. I think a year from now, Ted, you and I will be having a very different conversation.
I certainly believe so too.